Hi everyone, this is the second video in the series of catching expiry day 0 to hero trades in Nifty 50 option buying. So in this video, this is the part 2. In this video, I will cover all the bear openings, and the right way to navigate through this series is to watch the videos in the order. So since this is the part 2, you must complete part 1 video to understand this. So if you haven't watched part 1, the link is in the description. Please watch that video and come back to this. So in part 1, I have covered all the details about my study of expiry days and high-level insights on finding 0 to hero option buying trades in Nifty 50. So in this video, which is part 2 of the series, I'll be covering how to trade bear openings on expiry day. So bear opening means so we have around 48 expiry days in 2025, and out of 48, 23 had bear openings, and 23 had bull openings, and two of them has it sideways. And the bear openings happen to be, compared to bull openings, they happen to be more profitable, more predictable, and there is almost no tight range days occurred in bear opening days. But if you the next video I'll be making is bull opening video, how to trade that. But if you compare these two videos, you will understand why I said this, and you could be a little disappointed by that video or the profitability of bull opening days. It is profitable, both of them are profitable, but bear openings happen to give most profits compared to bull openings. And the patterns or setups discussed here happen to work in normal days as well, and these are not exclusive to expiry days. So I started all this study and research out of my curiosity to understand and figure out whether this hype about 0 to hero trades on expiry days, is it true, or is it just a scam by some YouTubers or Telegram channels, or of the people who just happen to sell courses or calls. So I started this study to figure out if it is possible to get a hero to zero trade on expiry days. It happens so that it is possible, and I started this study only with the expiry data of 2025. So we had, as I said, we had 48 expiry days so far in 2025. I took all that data and I started this study. But as I move forward this study, currently bear openings is completed, bull openings is almost completed, and when I look at normal days as well, these setups works pretty much same in the normal days as well. So the data is not exclusive to expiry days, but when these kind of things happen on expiry, they'll have so much momentum, so much more momentum compared to normal days. Hence, they will, result in bigger swings. Also, the less price of the option on expiry day. So on expiry days, you can find options for like 5 rupees, 10 rupees, 20 rupees. If you bought at that price, and when it goes to 100, 200 and 300, some days it happened, some days that also happened. When your option goes from like 20 rupees to 100 plus, you are getting the risk reward ratio of around 1:10, and that sounds so attractive. Whereas in the normal expiry days, even though the same setups happen, the option buying price, the buy price of the option is not around 10-20 rupees. It's more compared to the day that we are trading. So the risk reward ratio obviously is not as attractive as on expiry days. Hence, these kind of setups, yield to something we call as zero to hero setups, right? So, and the last thing I want to mention is setups change and the new behaviors will be found as we get more data. So as I said, if you see 2025 expiry days so far, we had 23 of them in the bear opening, and by the end of this video you will see what happened and what are all the setups and what are the buy conditions, what are the exit conditions for all these 23 days by the end of this video. And you will be surprised that how repeatable they are. And if you see like 2024 data, and if you fetch all the 2024 expiry days, and if you pull all bear openings in that, it is you will see some of these setups happen, but you could also see some other setups as well, which became less frequent with the time. From 1 year to today, if you see again the expiry days, you can see some of the setups that we have discussed coming frequently then also, but some of them becomes less frequent. So the key to being always profitable in the market is you always trade the winning setups in the recent data. What we are doing now, we are taking last 1 year data. While we are continuously studying the market, as we are trading this, we are also studying the market to find the new behaviors and new setups. If you find some new setup which is occurring more frequently and it is profitable, you take that and you add that into your setups, tradable setups. And if you happen to find one of the setups that you are currently trading is becoming less and less frequent over the time, you can remove that from your tradable setups. So this last point is my current knowledge and my current way of looking at the market and price action systems and setups. If I change my mind for any reason, I'll make sure to update you guys. So with that saying, let's go inside the video and see what. So the bear openings, how am I classifying bull openings and bear openings? So in the previous video of this series, one of the point I mentioned is the zero to hero trades only happen after 1050. So, and the way to trade them is looking at the pattern that has formed before 1050. So I have taken the screenshots of the charts, how they look by 10:50 a.m. on these expiry days. And if the by 10:50, if the market price or Nifty 50 price is lower than the open price, I classify them as bear openings. If they are otherwise, and if the price is higher than the open price, I classify them as bull openings. And you can see the examples here. Market opened here, and by 10:50 it get lower. Here it opened here, and by 10:50 it got lower, and same here by 10:50 it came lower and halted there. So these are the entry conditions. So what kind of trades we can take in the bear openings? Continuation means we are taking the sell trade, and reversal means we are taking the buy trade. You don't have to understand these now. So these are the different entry conditions. The rule is you have to the chart has to meet at least 2 or more of these conditions for you to enter into a continuation setup, and at least two or more of these conditions for you to enter the reversal setup. It's okay. I mean, I'm not going through these now, because as I take you through each day's chart and entry conditions, you will get the idea of what these mean. And next, exit conditions. So there is a predefined target 1 and target 2 for these trades. So if the targets meet, you exit. Or we also have an SL, but we don't let the predefined SL hit. So this is to be on the safer side so that you don't blow your account. So when you take a trade, you'll keep this SL in your system. But we also maintain trailing SL. Trailing SL could be different things. You might get reversal signal, so you exit. You might get disappointment bars, means the trade is not going in your direction, but it is just going sideways or consolidating. Disappointment, you exit. Or it is going in your direction, but the opposite bars made the trend line to break, you exit. Or you can also maintain ATR trailing SL or just super trend with 11 and 1 settings. So the trailing head SL helps you to keep your profits. So the trade might have hit your target one, which is 50% of something, and it reversed, and now it is going into your SL, predefined SL. You don't want to just sit and watch that, so you can maintain your trailing SL, so you can exit and keep your 50% profit. Same goes to 100%. You don't have to exit all of your position when the trade hits 100%. You can still keep 1/5 of your position, even though the second target also met. But when the trailing SL hits, you can take that last lot of viewers and you can call it a day. In the bear openings, I have made 3 different categories, and again all this study and all this outlook is subjective to my view. You can categorize them based on different things than I categorized them. So all this is my kind of way of thinking and looking at the market and looking at the data. And all this is totally subjective. Somebody else could do it in some other way, right? So let's see the 3 categories. This is category 1, where by 10:50 market only made 1 bear leg. So here you can see, let me take the pointer. So 1 leg and consolidation, right? So this is 1 bear leg. This is what I meant, 1 bear leg. And next 2 bear legs. This is the example. By 10:50 it made 2 legs. Leg 1, pull back, leg 2. And 3 legs. By 10:50 it made 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. So in each of these categories, again I have subcategories for you. So there are some rules that you should be looking out for. 1 leg plus consolidation means you should be looking out for continuation, and leg plus pullback plus leg means you should be looking out for, that's the textbook definition, but we can also see the exception cases, and I will tell you how to behave in those exception cases. So leg 1 pullback, leg 2 means you should expect 1 more pullback and enter the continuation trade. So leg 1 pullback, leg 2 pullback happened by 10:50, pullback also happened, then you should look for continuation trade. 3 legs happened, then you can look for reversal trades, and reversal failed twice in standard setup. So it's okay if you are not understanding this now, but when I go through the day, when I go through the days and examples, it will all make sense to you. Reversal failed twice in the standard setup. So this is the standard reversal setup. Let's say it failed twice, then in that case you can look for continuation again. And let's say in these continuation setups, that continuation failed, and instead of that we got a reversal breakout. In the sell continuation in setup, instead of sell breakout, we got a buy breakout. Then you can look for, so this is a mistake. Oh, sorry. Yeah, this is correct only. You can look for reversal. And rev plus rev possibility, reversal plus reversal possibility. If you had seen the part 1 video in the series, you would understand what I meant by this. When you are looking out for reversal possibility, you should be looking out for second leg test and double top and wedge top. You will see them inside the video what they mean, and reversal plus reversal plus reversal, which I will be calling it as triple R. For that possibility, you should be looking out for double bottom and wedge bottom. So now let's see the one leg open categories. Within those, we again have subcategories. Let me pull out the Excel. So this is the cleaned and it only has limited data. So these are all bare opening expiry days in 2025. In this we have 3 categories: 1 leg, 2 leg and 3 legs. So now I will just filter 1 leg categories. In 1 leg we have 9 days. So within 9 days we again have 3 categories. So the first one is 1 leg plus consolidation. So this category has 6 days. When you see only 1 leg and consolidation formed by 1050, you can almost always expect continuation trade. So even if it got reversed after the 3 legs which we had discussed in that setup, even if it had done so, it will only go to that after giving you at least 1 continuation trade, then only it will reverse. So these are all the 6 trades. Now we will see how they look like. So 1 bare leg consolidation follows continuation almost always. So this is what I mean, bare leg consolidation. This is category 1. Next, another subcategory is bare leg and pullback, and that pullback is less than 50%. So it only pulled back until 50%. Then according to our rules, what do we expect when we had leg and pullback? You should look for continuation trades, right? But the exception is if the pullback goes into deep, then which is greater than 70%, if it retraced until here, then we should keep an open mind to enter buy trades as well. So this is like another category where pullback and less than 50% bare leg and less than 50% pullback happens. And the third category is bare leg and deep pullback has happened by 1050 itself. So this is the example: bare leg and pullback by bulls. It has retraced almost 70% of the bare leg. So in that case we should expect reversal. So let's see the first category, which is bare leg and consolidation by 10. These are all the days that has happened, and I will take you through each day of this category and this subcategory. So this is the 6th Feb chart. So the opening by 1050 looks like this, leg consolidation, and the rest of the day has followed bears. Only at the end we got little pullback. The entry for this is low 3 or low 4 plus MA test. So if you don't know the low 1, low 2, low 3 entries, I will just give a small explanation of what that is. So the low one means in a bear trend, while the market is consolidating or pulled back, the first attempt by the bears to go lower is low 1. The second, if this low 1 fails to go lower than the previous swing, the second attempt by bears to go lower is low 2. If this also fails to go lower, the third attempt is low 3, right? So this is the low of the day and it is consolidating. This is the first attempt, which is low 1. This is the second attempt, which is low 2, and that also failed. So this is the third attempt, that is low 3. If this also fails to go lower, the fourth attempt is low 4, and so on. Same goes for the bulls. In the bull market or the bull swing, when it pulled back or consolidating, the first attempt to go higher than the previous high by the bulls will be high 1. If that fails, the second attempt to go higher is high 2. If that also fails, the third attempt to go higher is high 3, and so on. I hope that helps, but if you want a separate video on that, feel free to comment. Now, so when the market made one leg and consolidation, what we thought, the normal behavior that we should be expecting is for it to go lower, and the best entry for that, and in this case, is low 3, and if the low 3 fails, low 4, low 3 or low 4 plus MA test, the test that happened here. So you can see here, this is the perfect entry, low 3 along with market testing the EMA. So when I say MA, I actually meant EMA. This is the 21-day EMA. Okay, or in some cases, the low 2 itself will give you this continuation trade, and you won't have the opportunity to enter on the low 3. In that case, what you do, when the low 2 gets the follow through bar, you can enter there, and the target will be 50% of the leg 1 move. So if you consider this as leg 1, you can calculate the 50% of this movement, and you can keep that as if you enter here, that would be around here, your target 1, and 100% of this move will be your target 2. In this case, the target 2 didn't meet, but you can exit here when you see bullish momentum. So when the market try to reverse here, that would be your sign to exit, or when it try to reverse here, it would be your sign to exit, or when it's consolidating here, you can exit there as well. So that you can keep the trailing SL as 2 consecutive opposite strong bars or 3 consecutive opposite bars, or you can just keep super trend 11,1 as your trailing SL. That is also okay. So on 22nd May also, the opening contained leg 1 and consolidation. You can see pretty much same has happened. We got the continuation in form of bear channel. So here also low 3. So if you consider this as low of your day, this is low 1, this is low 2, this is low 3. It's okay if you had entered here. You can also enter in the low 4 and MA test. Target 1 and target 2 are pretty much same for the everyday trade, and SL that you keep in the system will be high of the consolidation, or if it is pullback in the second category, that will be high of the pullback. If it is a reversal trade, low of the leg 3 will be your SL in the system. But coming to trading SL, as I said, you can keep different things, or when you see the market losing your momentum in your direction, you can exit. So this is another example of bear leg and consolidation opening, bear leg consolidation. So here you got low 2 and follow through entry, and which is also EMA test, and target 1 and target 2 pretty much are same, and you will meet your target 1 as well as target 2 in this scenario. And here you can also see one more setup of 3 legs and reversal attempt, which we will see in the coming days. This is another setup. So here you got so leg 1 consolidation, here low 3 and bear flag. This is not exactly an MA test, but you can enter at low 3 here, low 1, low 2, low 3, and this is also a bear flag. So you can enter here, and the reversal rules that we had discussed before are when there are 3 continuous legs in one direction, you should look out for reversal, and the reversal setup here is 3 legs. You should consider 3 legs, and the consolidation happened. Bears tried to go one more time lower, so bear's second attempt failed by bull breakout bar here. So in that case you can enter the reversal trade, and this same entry condition will repeat many times throughout this video in different days. So again, bear leg and consolidation, bear leg consolidation, 14th October this has happened, and it again followed by the continuation, and after 3 legs it reversed. So let's see the entries. So you can enter pretty much here because it is testing the EMA, and you can also see 2 opposite hammers. So this is bull hammer, this is bear hammer. If you can see it here, this is a hammer, and you also got the follow through bar. Let me erase this. So after bear hammer you also got the follow through, and this move is pretty strong, so you can enter on the low one, especially when it is making opposite hammers, and when it also gave the follow through you can enter. And entry 2 is the continuation setup. In the same trade you are entering again. So the entry 2 is low 3 bear flag. The entry condition we have seen in the previous day also. So low 1, low 2, low 3, and this is a bear flag. So you can enter here as well, and it will meet your 2 targets, 50% of leg 1 and 100% of leg 1. And when you see the reversal setup, which is 3 legs, leg 1, leg 2, leg 3, and second attempt of bears to go lower has failed, and you got bull breakout. You can enter here, and the entry 4 will be in this reversal trade only. Let me just erase. So the entry 4 is in this reversal trade only. You got another entry, that is bull flag and MA test of bulls and high 3. So high 1, high 2, high 3. You can enter one more trade here, or you can just add in to your position. Same goes target. Target 1 will be in the continuation trades 50% of this measured move, and target 2 will be 100% of this measured move. And for the buy trades you can take the 50% of the previous leg. Even if it is bear leg, you can take the length of this leg and expect 50% of the points that this leg contains as your target 1 and 100% of the points as your target 2, and SL for bear trades is this pullback or consolidation high. That would be your SL in the system. For bull trades, the that will be low of your leg 3. That will be your SL in the system. We have one more. So here also we got same low 3 or low 4 here, or you can just enter low 2 and MA, low 2 and follow through MA test, and you can exit here when it is making 3 consecutive opposite side bars and enter again here. That also has the same entry condition, low 3 or low 4 and MA test for the continuation trade. So those are all category 1, subcategory leg 1 plus consolidation. Next I'll tell you leg 1 plus 50% pullback that happened on 6th March. So what we thought in rules is, when there is leg 1 and the pullback is only until 50%, we have to look for continuation trades. But in this case, let's see what happened. So buy 1050 leg 1 and pullback. We will be looking for low 3, low 4, low 3, low 4 or low 2 follow through continuation trades and bear breakout. But what followed by this is 3 strong bull bars, and it retraced until 80% of the initial bear movement. So by this time you should be open to take up bull trades as well. It can go lower, but you don't know. It could give bull breakout, could give bear breakout as well. So you should be open to take a trade in any of the direction. So entry 1 will be, so entry 1 here will be the continuation trade, the sell trade after this long breakout bar. But we also should be, whenever the entry bar is so big, our risk is also big. So we should keep a very tight trailing SL just in case it goes in the opposite side. It went little lower, but immediately we got 2 consecutive bull bars or 3 consecutive bull bars. You can exit at either one of those, and the re-entry will be reversal entry. So MA pullback or EMA pullback and second leg test. If this is leg 1 and this is leg 2 for bulls, it is testing the second leg and failed bear breakout, and you can enter at 2 consecutive bull bars or 3 consecutive bull bars. That will be your entry condition. Exit conditions, target 1, 2 and SL stay same. So this is the same one, duplicated. We only have 1 day with that category. Then the third category is bear leg and deep pullback. We had 2 days which actually gave us the continuation and reversal, which will be subjective to the day. But if we follow the rules, and if we had looked out for the rules and the scenarios that I have mentioned in the start of this video, you can actually take good profit from both of these days. So one is 28th August, bear leg followed by deep pullback of the bulls, which is like almost 70% of the pullback, and this pullback is 2-legged. By this time, whenever the pullback in any one direction is greater than 50%, then you should be open to look for the trades in the opposite direction as well. So by this time you should be open to look for bull trades as well as it can go and turn into bear day as well. So in this case, it gave some consolidation and ultimately gave bear breakout. The entry condition will be consolidation plus high 3 failure, high 1, high 2, high 3. It failed by this bar. So you can we got a bear breakout bar. You can enter here, and re-entry is continuation of the same here. So if you had entered here when you got like these two strong bull bars, you would exit because it is breaking the trend line, and the price action also saying otherwise. So you can exit. But when it is again going in your direction, you should be open to re-enter. So the conditions for this is MA pullback and bear breakout bar. You can enter here or here, and bear breakout and follow through. Another day where bear leg and deep pullback happened is on 20th October 2025. This is the opening pattern by 1050, and so since by this time you should be open to take bull trades as well and bear trades as well. But initially we got the bear breakout, and the first entry is you enter here, but when you got disappointment bars at this particular time or this particular time at this particular time, all these are dojis, so you exit your bear trade. And the second entry is reversal entry for the bulls. The conditions for that are failed bear breakout and MA test for this movement, or you can say as pullback into EMA, and consolidation and high 3. So high 1, high 2, high 3. You can enter here and you will exit around this point. And as I said, we have to look for wedge tops and double bottoms and second leg test, which this is second leg, and when it is going in this direction it will test that. So if you are looking out for all those, when you got this signal, you will enter the reversal plus reversal trade. So here the entry conditions that met are second leg test, broad double top and wedge top here, and bear breakout bar, and we also had high of the day tested here. So those are all about leg 1 opening patterns. Now we will see leg 2 opening patterns. Let's go to let me filter out to leg category. We had around how many days? We had 7 days, and within this again I have 3 categories. Let me just show that in the PPT. So one category is 2 bear legs followed by either consolidation or pullback. What we should look for is continuation. And second, let me show them. So this is the example, bear leg 1 and bear leg 2, and we had small pullback here or consolidation. Next one is bear leg plus pullback plus bear leg. So bear leg, pullback, bear leg. So it also follows continuation, in some cases reversal, but the reversal conditions that we are already looking out for. Okay, and then bull leg. First we has a bull leg in the open, which is followed by 2 bear legs, bear leg 1 and bear leg 2. This one almost has a pullback and third leg down, which will followed by the reversal. So let's see the category which is having bull leg first and 2 bear legs. We had 2 days, and 2 days almost has a predictable and same end of the day charts, or at least until afternoon they are same. So both the days followed by pullback, and then they gave one sell trade, and then that sell trade completes the third leg, and then we got a reversal. So first is August 7th. Let's see that. So August 7th we had bull leg followed by leg 1 bears, leg 2 bears, and first trade is continuation. So we should expect for pullback and low 3, low 1, low 2, low 3. You will enter here or here, and you also look out for the reversal trade, because 3 legs are completed, right? When 3 legs are completed, you will be looking out for reversal trades as well. So the second entry will be for the reversal trade. The conditions are 3 legs down followed by a climatic bear bar followed by dojis or consolidation followed by bull bar. You can enter here or enter here. And second in this category is 28th October bull leg followed by bear leg 1 and bear leg 2. So this could look little complicated, but if we look out for the rules, this is all predictable behavior. So first we according to the day structure, we look for a pullback and then sell trade, right? So here is 1050. We look for pullback and we enter the low 3. Low 3 is here. If you enter here, you can get this many points, but if you enter on the breakout, you won't get much profits, but we are also looking out for reversal. So the second entry will be reversal. 3 legs down, 1, 2, let me just so 3 legs down, 1, 2 and 3, and here you will enter bull's second attempt to go higher. So here they made one attempt and here it is the second attempt, or if you just consider this as pullback, even that is looking stronger. Bull breakout bar, you can enter here or here. So after that reversal plus reversal. So what we will be looking out for is second leg test. So this is the second leg start of the this is the second leg starting of the bears. So when we are making the reversal, it will test the second leg and it can make double top with that second leg, and only if that double top fails, it can go higher. But if it halts at the double top and also makes wedge top, you should be looking out for reversal plus reversal scenario. So here high 1, this is the swing high, high 1, high 2, that failed and we got a bear breakout. You can enter here and it will and when you are entering reversal and reversal, again you should also be looking out for reversal, and you should be looking out for double bottoms and wedge bottoms. So that we got here. So this reversal here is weak. It is a weak bear channel. You can see a lot of wicks here, and we had lower low double bottom made and wedge bottom also made, and we got a bull breakout as well. You can enter here. So those are all about first category of second two-leg opens, the second two-legged opening, and the second category is two legs followed by pullback or consolidation. So let me just filter that. Two legs followed by pullback or consolidation. We had 2 days. So as I said, when you see leg and pullback, according to our rules, you should be looking for continuation. Only that if that continuation fails, you should be looking for the reversal. So you enter the continuation trade here when it tested with MA, and this is MA pullback, and you got a breakout bear bar, and which is also bearish engulfing, and it also tested second leg top, and it is making double top with that. So you can enter the sell trade here, and when it is making 3 legs, you should be looking out for reversal as well. So leg here leg 1, leg 2, and leg 3. So as I said, this entry condition we had discussed before, that will come again and again. So it is 3 legs down and minor DB, and bears tried one more time and failed. Bear's second attempt got failed, and we had doji followed by bull breakout bar. You can enter here, and if you had seen 3 consecutive bear bars and exited here, you can enter here again, but it turned out to be a weak bull channel, but it can still give you some profit. So the second day in this category is 17th July. So we had leg 1, leg 2, followed by consolidation or small pullback. So whenever like in this scenario, usually we look out for only continuation trades. Only if the continuation fails, then only you should look for reversal. That was the rule. So here we didn't get the continuation trade because we didn't get any strong bear bar, but we got a really big bull breakout bar. If you had seen this wick here and avoided this trade, that's a good thing to do. But if you had entered, you can exit here when it's making 3 consecutive bear bars. And when do you so this is a reversal trade, and it got this day has reversal plus reversal again. So when do you enter the reversal and reversal trade? So it tested the second leg and made double top with it, and you got second entry here when it is tested the MA. So you can enter here, and even if you exited here, you got another entry opportunity here with the same condition, MA test and bearish engulfing. So that's the second category, 2 legs and pullbacks and consolidation. Third will be leg pullback plus leg. So we had 3 days. 2 days we had leg pullback leg, and another day is we had deep pullback, which actually not only retraced the leg 1, but it went even 200%. It even went 200% up, and then it made the leg 2. We will see how to trade those. So yeah, 9th October we had leg 1 50% pullback and leg 2. So leg 1 pullback, leg 2, you should be looking out for pullback according to the rules. So here we got the pullback. Not only we got the pullback, 50% pullback, but we also had low 3 here. So this is low 1, this is low 2, and this is low 3. So you can enter here, and even though you exited somewhere around here, or here you could make some profit, but you also got the same condition. So low 1, low 2 and low 3 MA test. So you got one more. Although it turned out to be only scalp, you still got a continuation trade. So as I mentioned in our last video, which is part 1 of this series, not every expiry can give you 0 to hero trades. Only some of these expiries. So if we have like 48 days per the year, 48 expiry days, maybe 10, in the best case 15 days will give you that 0 to hero trades. But we can always catch swings in the other days, and following these rules you can catch swings and you can also catch 0 to hero trades. The conditions are same for every trade, but based on the market momentum that day, it will decide whether you are making the 0 to hero trade or the normal swing, right? So this is another day. In this day we got leg 1 pullback and leg 2. Then in this scenario, what you should look for is pullback. Please refer the rules if you are getting confused while I am telling this. So this is the reason I covered the rules first. So in the rules it is mentioned that if you had leg 1 pullback, leg 2 by 950, pullback is still pending. So here you should be looking out for pullback. So it went little lower, but eventually you got the pullback, and this happened to be high 3 as well, and you got this many points. And if you had entered here, you get the exit chance when you got 2 consecutive opposite strong bars. Let's say you didn't entered on the low 3. So here we have low 3. Let's say you didn't entered, but you entered after this bull breakout bar, which is very big. In that case also you can exit at the 2 consecutive strong bull bars. If we are following the system, you can eventually catch this big trade, and you can keep your loss very small, and the entry 2 will be reversal trade. So for reversals, whenever market completed 3 legs, we should be open for reversals, leg 1, leg 2, leg 3, and 2 consecutive very strong bull bars. You can enter here and you can make the points until here, and you can exit here when you got strong bear bars and disappointing bars are making, but you got the re-entry opportunity. So this happened to be a bull flag, and it also gave you high 3 entry around here. If you hadn't entered here, you can also enter here, and eventually you can get your 0 to hero trade in this day. So reversal continuation will be, if you had entered the reversal here, it got 50% pullback and MA test and high 3 bull flag around this point. So you can enter here as well. Next, the third day is 25th November. It made a little different pattern than the regular patterns that we are discussing. It gave leg 1 down, and pullback is 200% of this leg 1, and then again it made leg 2 down. So when you see this kind of pullback by the bulls, when the pullback happened to be higher than the initial bear swing, you should be open to take the buy side trades as well. And so in this case, yeah, around here you were at 1050. It's okay if you want to enter a bear trade here, which is bear continuation trade. If you entered here as bear breakout, but you will eventually exit here. So in here I have given 3 entries, which is bull continuation. So continuation for this movement, lower low, double bottom, and bear breakout failed here to go lower, and 3 consecutive bull bars. You can enter here, and let's say you have exited here when 3 consecutive opposite bear bars entered, but you can get a re-entry when this doji has made and it is followed by bull breakout again. You can take another entry, and that will give you profits based on the bear channel, and you can exit around here. And the last one is reversal. So when you see the reversal, whenever you see the reversal, you were being open for the reversal to reverse, right? So here what we thought of looking out for is double tops and wedge tops. The broad double top which is made with the previous swing, and 4 pushes up, which is making a wedge, and you can enter a reversal and reversal trade here, and that will give you your zero to hero trade. So that's all about 2-legged category. So we had 3 categories in 2 legs. Now let's go to the third category, 3 legs. 3 legs already made by 1050. So when there are 3 legs, what we expect? We expect the reversal. But in some cases there are no subcategories in this, but whenever the reversal failed twice, according to our rules, we can expect the continuation. Some of these days went on sideways, and some of these days gave reversal plus reversal, and that reversal reversed again. But if we are looking out for what we should be looking out for according to the rules that I gave in the starting slide, you can cash really good number of trades in this. So yeah, I guess the order is little messed up. So it is 11th November is placed first in the trades. So leg 1, pull back leg 2, pull back leg 3. Should be looking for reversal. So first reversal entry condition is 3 legs and there are 2 dojis, or you can really ignore this entry, and when the bears has failed the second attempt to go lower, you can exit here. So forget about this. I had given this entry only here, which is 3 legs and bears failed the second attempt to go lower, and bull breakout bar. You can enter here. And the second entry here is reversal only, reversal continuation until here. If you had exited at this point thinking you are open to make the broad double top or second leg test or just 3 or 4 bear bars, you can enter again. This is high, it has formed high 2 by this bar, and this is this happened to be just a bull flag. So your second entry is here, and you can either exit here where the really good bear bar happened, or you can exit here. That is also okay, or you can just keep your trades running until you see 2 strong consecutive bull bars, or you can exit when the trend line here is breaking, or you can just keep super trend with 11,1 settings to be on as you are trailing SL, and you can keep that as to ride your winners. So that's about the trailing SL. And yeah, so we got to 16th Jan. 3 legs happened. We should look for reversal trade, and reversal trade condition here is 3 legs. consolidation, bears attempt to go a little lower or here. I guess they tried one more time and you got bull breakout, you enter here. Second entry is reversal continuation only, bull flag here and high to breakout, you enter here. And third entry is this reversal got reversed, so you are looking out for broad double top and second leg of your initial 3-legged movement to be tested and wedge top. So that met here and you got a breakout, bull breakout, and you enter here as your reversal plus reversal trade, which happened to disappoint you and it didn't give much profit, so you enter when it disappointed with these all doji bars. And when you got the high 2 again and after low 2 has failed, bears failed attempt, MA test for the bulls or just EMA test for the bulls, and bull breakout bar happened, you can enter here again and get some more profit from your reversal trade. Next, it happened on 12th June, leg 1, leg 2, leg 3, and here. So by this time, this is 10:50 and leg 3 happened and bears made one more attempt and failed and you got bull breakout. So you enter the reversal trade, but it failed. So you can just exit here when 2 consecutive opposite bars had happened, and the entry 2 is reversal continuation only. You can try for the reversal one more time. So here also bears tried one more time, and failed. You can enter here or here, which also failed by these 2 consecutive bear bars again. And the third is continuation trade, just the continuation for this moment. So you can see as 2 attempts of bulls has failed and it tested the EMA and 2-legged pullback, leg 1 and leg 2 to the EMA by the bulls, and here somewhere here low 3 has happened and bear breakout. So you can enter here and that will give you your 0 to hero trade. Then again on 10th July we had 3 legs by 10:50 and first reversal is bears tried one more attempt to go lower and they failed, so you will enter here, but you can exit around here when you got disappointed and it tested MA and double top with the third leg, so you enter reversal plus reversal trade. This also failed, but since the momentum is kind of not so good here, it's okay if you want to just avoid the trades, or even when you take this reversal continuation trade here, you exit around here, and when that also fails and it is making triple top, you enter here again. This happened to be a disappointing day, but it didn't give you much loss. Next, 9th September, leg 1, leg 2, leg 3, but you can also see bars are very much overlapping and they have really long wicks, but following our reversal system for 3 legs and second attempt by bears to go lower also failed and bull breakout came, you can enter the reversal trade, but by this time you should understand the market is going to be sideways because of this behavior of overlapping bars and long wicks. It's okay you avoided this reversal trade as well. By seeing this sideways price action, you should expect the day to be sideways day, and you don't take any more trades on that day. Next 30th September, leg 1, leg 2, leg 3, and first trade is reversal trade, and then double top. Second is reversal and reversal, double top with the second leg, and you enter reversal plus reversal trade. By here you will see the disappointment for your reversal and reversal, and you enter the continuation for this first reversal trade again, and seeing the wedge top and double or triple top with your second leg, you can enter the reversal plus reversal trade again, and this will give you some swing. So 18th November, this is the latest expiry day. Today is December 2nd. So 3 legs, leg 1, leg 2, leg 3. So you will enter here for the reversal trade, and it tested leg 2 high. So it also made 3 legs for the bulls, and it also has the wedge top. So you enter reversal and reversal trade around here, and you can exit that when you see the double bottom being made with the second leg or third leg of the bulls here, and you can enter this, or you can just keep it quiet and you can just exit this, and you can enter this wedge top and double top reversal continuation trade. So that's all about this video, bear openings on expiry day. And as I said, these pretty much work the same, the setups pretty much work same on the normal days as well. I'll make another video which contains these kind of examples and rules and setups for the bull openings as well. Please do subscribe to the channel and like the video if you find it helpful, so that it will so that YouTube will suggest it to more people.